home buyers' demand has crashed harder than the economic meltdown 2008, and the fallout is enormous. Whether you're a homeowner, a renter, or even just a curious observer, you won't want to miss the details of this game-changing development. As we delve into the numbers and explore the reasons behind this unexpected turn, you'll discover just how much the housing landscape has shifted. Demand for mortgages is dropping to its lowest levels in almost 2 decades because prospective homeowners struggle to afford the high price tags on properties. Even if you manage to save up enough cash for your dream home, you might find yourself priced out due to the shortage of available properties on the market. It's a frustrating situation. And to make matters worse, mortgage rates are sky high right now, which means your monthly payments could be more expensive than ever. In fact, this week's mortgage rates surged to a staggering 7.7%, which is seriously bad news for anyone looking to buy a home. Before I reveal why mortgage rates are touching the sky, please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe is fuel for the algorithm that helps support this channel. Thank you. Now, back to what I was saying. So basically, the reason why mortgage rates are at their highest in ages is due to a few different factors. These include changes in inflation, how many jobs are available, and the fact that nobody really knows what the Federal Reserve is going to do next. According to Sam Cotter, who is an economist over at Freddie Mac, these high rates are causing fewer people to want to buy homes right now. And honestly, it's not really that surprising. Who wants to pay crazy high fees just to get a mortgage, right? It also seems like some homeowners are deciding to sell their homes. You might be interested to know that the number of new homes for sale in the U.S. has gone up by 2% since September 2023. That's not too bad, considering that normally there is a significant drop in listings during the transition from summer to fall. Now, I know what you're thinking, but wait, if more homes are being listed for sale, then why is the total number of homes for sale still down by 14% compared to last year? Well, that's a valid point. However, there is a silver lining to this. The decline in the number of homes for sale is the smallest it has been since July. So what does this all mean? It could signify that more people feel comfortable selling their homes, even with high mortgage rates, or maybe they're being forced to sell due to financial difficulties. The rent market in the U.S. is also finally calming down after a long period of sky-high prices. Landlords are starting to backpedal on their previously steep rent increases because tenant demand is suddenly dipping. This is a relief for renters struggling to afford to live in some parts of the country. There has been a significant shift. A few months ago, it seemed like everyone was eager to secure a place to call their own. However, the situation has now changed, especially in cities like Las Vegas and Phoenix, which were experiencing a housing market boom during the pandemic. It seems like there are fewer folks on the hunt now for a new place to live. In fact, the stacks of applications have become slimmer, and home listings are staying put for much longer than before. To add to that, studies reveal that U.S. households are actually shrinking rather than growing. It's a whole different ballgame now. According to Joel Kahn, the deputy chief economist of the Mortgage Bankers Association, the demand for mortgages hit its lowest point since way back in 1996. Yikes, the culprit? Rising interest rates are making it harder and harder for people to buy a house. But don't worry, folks, home buyers are finding ways to work around those pesky interest rates. Some are turning to adjustable rate mortgages, which have lower introductory rates than traditional mortgages. These rates only last for about 5 to 10 years, though, before they reset to higher rates, so keep that in mind. The demand for ARMs has risen in the past month, going from 6.7% of purchase applications to 8%. While it may not seem like a massive increase, it indicates that people are now considering a wider range of options when it comes to financing their home buying aspirations. Currently in the U.S., it's becoming really tough for people to afford housing. Prices are skyrocketing and mortgage rates are increasing, making it difficult for first-time home buyers to break into the market. The home buyers are taking a step back as mortgage rates reach their highest levels in over 2 decades. Not only that, but the median monthly mortgage payment in the U.S. is quickly approaching a staggering $3,000. Mortgage applications are at their lowest level in almost 30 years. Additionally, Redfin's Home Buyer Demand Index, which measures the number of tour requests and other early-stage demand signals, has plummeted to its lowest point in almost a year. More and more people are denied a mortgage because they don't make enough money. Ted Rossman, who works as a senior industry analyst for Bankrate, says that the reason this is happening is because homes are getting more expensive and interest rates are going up. Basically, if you're paying a lot more each month towards your mortgage, the lender might not think you have enough income to cover it all. It's pretty wild if you think about it. I mean, owning a home is kind of the American dream, right? But if you can't afford to make the payments, that dream might never become a reality. According to Rossman, this problem is affecting a lot of people. It's not just those who are struggling financially. Even folks with good jobs and decent salaries might find themselves in this situation. For those who can pay in cash or are upgrading from their current home, the cost of mortgage rates isn't that big of a deal. However, first-time homebuyers are hit the hardest because they often make less than what's needed to afford a home. It's a bummer, but it's the truth. On the other hand, those selling their current home to buy a new one have a better shot. They've likely built up equity in their home, which means they can offset the higher monthly payments with the profits from selling their current abode. But here's the kicker. Buyers who bought a home during the pandemic with a low mortgage rate and want to sell now are in a pickle. Not only are they losing out on a low rate, but they may also be selling their home for less than what they bought it for. Ouch. Did you know that in half of the major cities in the country, home buyers need to have a six-figure salary to afford a median-priced home? That's right. According to an analysis of 100 metros, at least $100,000 is required to fulfill this dream in 50 of them. It's no secret that home ownership can be expensive, so it's essential to plan and save wisely. If you're planning on buying a house anytime soon, you might want to do some serious number crunching first. Figure out how much you can realistically afford to pay each month based on your income and other expenses. And remember, just because you get approved for a loan doesn't mean you can actually afford it. Make sure you're being smart with your money and not biting off more than you can chew. So if you're one of those people dreaming of buying your own home, don't lose hope just yet. Even though mortgage rates are likely to remain high, there's still a chance for buyers to hop into the market when things cool down a bit. Plus, there's some good news. New listings are popping up more frequently, giving you more options. On top of that, average rates have been on a downward trend lately, which means you may be able to snag a better deal than you previously thought possible. Navigating the situation poses a significant challenge for prospective homebuyers. However, it's important to bear in mind that securing a mortgage approval depends on various factors, with income being just one of them. Thanks for watching, and please make sure you subscribe if you enjoyed the video, and be sure to leave a comment below letting me know what housing trends you're seeing in your local market.